Alrighty, what is going on, everybody? Welcome back to another CYPRX video breakdown. In today's video, I'm going to be reading through the fundamental breakdown given to our private CYPRX community, things that we have been mentioning for everybody to be paying attention to as we head into 2024 are now up and coming this week. So these are massive fundamentals that everybody, especially if you're a risk asset investor or trader, should be paying attention to. If you all enjoy these video breakdowns, giving you guys insights to the market and what to be focused on as we go throughout the year 2024, make sure that you smash that thumbs up button and subscribe. We do appreciate the love and the support. So I'm just going to be reading through our fundamental piece given to the private CYPRX community. Let's jump in. So this week promises a significant amount of developments in the digital asset space, with the primary focus on the Bitcoin ETF news scheduled for January 10th and 11th. Now, this also coincides with the release of US inflation data, and we have been paying attention to this and telling you all to be doing the same, along with the narrative that the Federal Reserve is going to cut interest rates and the tone from the Federal Reserve. Now, if these Bitcoin ETFs do not get approved, don't forget in previous video breakdowns, don't be butthurt if there's market manipulation or some type of dump or some type of dramatic event that takes place. We showed you all that a lot of these Bitcoin ETFs and their deadlines are actually pushed all the way out until May of this year. And I haven't really seen any mainstream platforms say that. So it's interesting that that's what's really happening behind the scenes given the dates, but nobody on the mainstream has really been talking about the dates having been pushed out all the way till May of this year. And I showed you guys screenshots of that. I'll show one right here on the screen. Okay, we have like the Franklin ETF is all the way for the deadline May 30th of this year. Okay, so that's months away. So just in case this week doesn't come into fruition, remember that these Bitcoin ETFs will eventually get approved. It's more so a matter of when, not if. Now, our paramount objective remains the preservation of capital, underscoring the importance of reacting dynamically to the market events without being overly committed to a particular bias. So remember, do not be impulsive in your trading this week. Do not chase the market, be reactive, be data dependent, and understand that this week is going to be very volatile. Beyond the Bitcoin ETF, there is a wealth of US data to analyze as well, influencing both the forex and crypto markets, which here in the CYPRX private community, we are both forex and crypto traders and investors, obviously, of course. Now, the first half of this week features 3 Fed speakers, marking a potential shift from a dovish to a semi-hawkish stance. Understanding this change in tone is absolutely vital for risk asset investors, as a more hawkish Federal Reserve signaling higher inflation and the possibility of further rate hikes could negatively impact risk assets and strengthen the dollar. So it is something to be paying attention to. And in previous video breakdowns, I feel like have been one of the only communities on the internet telling you guys to be paying attention to this possibility. Now, in recent weeks, their narrative has shifted from lower inflation readings, a dovish Fed, and expectations of rate cuts, which have been fueling risk assets. We cautioned about the possibility of this narrative changing hands, given the Fed's willingness to raise rates if supported by data. A hawkish tone from the Federal Reserve in the first half of the week may weigh on risk assets, while also focusing on the inverse, not mirroring a bias, a dovish undertone, or a continuation from the markets via expectations that the Federal Reserve is going to cut interest rates could sustain a risk on market mood. So a hawkish tone from the Fed speakers could potentially weigh on risk assets. Vice versa, a dovish tone would most likely support the narrative that the Fed's going to cut rates and support riskier assets. Now, in the second half of the week, we will bring our attention to critical economic indicators like CPI or Consumer Price Index year over year and month over month, unemployment claims, and core PPI or Producer Price Index. Now, forecasts indicate, i.e. the forecast from analysts across the board, are indicating higher inflation readings, which could negatively impact risk assets. And this is something that we had been telling you all to be paying attention to in Q1 and Q2. If we see higher inflation readings, remember the Federal Reserve has said that they're going to be data reactive, data dependent, and they will not hesitate to hike interest rates. Now, the forecasts indicate higher inflation readings, which again could negatively impact risk assets. Inflation is a key determinant of currency valuation, and higher inflation readings could prompt central banks, i.e. the Federal Reserve, to consider raising interest rates to meet their inflation containment mandate, which is a goal of bringing inflation down to 2%. We had talked about this in previous video breakdowns. Focus your attention on the inflation data and the tone and the shift in policy stance from the Federal Reserve from a dovish perspective to a hawkish perspective if we see higher inflation readings. This will most likely end results in weighing on risk assets, bringing strength back to the dollar, and fading out the narrative that the Federal Reserve is going to cut rates in early 2024. So just be paying attention to this. Again, it's not guaranteed, but what we are attempting to do here is get you all to see that these markets fluctuate on a day-to-day basis based off of these fundamentals, and this week is set to be majorly impactful. So let's talk about the best case scenario. In my personal opinion, again, this is not guaranteed. This would just be the best case scenario for this week for buyers in risk assets, long-term hodlers that want to see an appreciation in their portfolio, and any day traders that are looking for buying opportunities. So for best case bullish scenario in a Goldilocks scenario, right? We would hope for a Bitcoin ETF approval that drives massive demand for the digital asset space, an influx of capital into the cryptocurrency asset class as a whole, given the approval of the Bitcoin ETF. And then on the data front, an ideal outcome would involve lower inflation readings, a dovish tone from Fed speakers supporting the rate cut narrative in early 2024, and higher employment claims indicating potential labor market weakness and dollar weakness. We need to see the dollar maintain weakness below that significant historical level of the 102.800 that we've covered in previous video breakdowns. Now, as we move ahead into this week, it is crucial to stay informed, adapt to changing market dynamics, and be prepared for various scenarios. With that being said, align your strategies accordingly. As always, the number one goal in this market is preservation of capital. Making money is easy, but preserving the capital or the money that you've made is the hard part. So take these things into consideration. Remember the best case scenario: dollar weakness, lower inflation readings, dovish Federal Reserve, okay, and a Bitcoin ETF approval that drives massive demand for this market. If any of those things change hands, where we see the Bitcoin ETF get pushed back, remember the dates go all the way as far back as May of this year. Remember that the Fed is stated that they are going to be data dependent. So if we see higher inflation readings this week, we can start to expect that the market is most likely going to price in a hawkish FOMC this month. The FOMC meeting comes out the last week of January. So if we see higher inflation readings, we can most likely assume that we're going to have a more hawkish tone from Fed speakers, and that would most likely weigh on risk assets in the short term. Now, again, remember, I've stated in previous video breakdowns, any drop in the risk asset classes as a whole, particularly in crypto, here at CYPRX, we're going to be seeing that as a buying opportunity. We all know where this market is headed long term, and in my personal opinion, when prices decline and fear is inflicted into the market due to declining prices, those are your best buying opportunities. Again, not financial advice, but that's when money is made. When you buy, quote unquote, the dips, when you buy these digital assets that are highly undervalued given their utility and use case and the potential for this market to thrive in the future, again, here at CYPRX, we will be buying any discounted opportunities. I've given out my private dollar cost average positions to the private CYPRX community in our monthly Discord. If you guys want access to these fundamentals before we push them out to the public platforms like YouTube and Instagram and the X space, don't forget that you all can join our private community by visiting CYPRXtrading.com. You guys have direct access to our institutionalized delta zones, our technical analysis given our dollar cost average positions, and our fundamental breakdowns. Many blessings to you guys. Hopefully this has been keeping you all in the loop. I feel like we have been one of the only platforms talking about paying attention to inflation, talking about paying attention to the tone of the Federal Reserve and the direction that the market takes from that. Make sure that you're paying attention this week. This week is going to be highly volatile. We will give you guys updates throughout the week as these data releases come out. Many blessings to you guys. Be cognizant, be aware. Remember, I'm not telling you all to go out there and buy digital assets if the market does decline. I'm just simply letting you all know what it is that we will be doing here at CYPRX. So with all of that in mind, be cognizant, be aware, and I'll see you all in the next video breakdown.